Can you hear me?
Yes, yes. Yeah, sound is clear. Yeah, I think. Okay, Assalamu alaikum wa rahmatullahi wa barakatuh. Bismillah ar-Rahman ar-Rahim. Alhamdulillahi Rabbil Alameen. Wassalatu wa atammit taslima ala nabiyyina Muhammad sallallahu alayhi wa sallam wa ala alihi wa sahbihi ajma'in wa tabi'ina lahum bi ihsanin ila yawmiddin amma ba'd. Welcome back to our weekly lecture of the Islamic Economics Association with University. And I would like to welcome all online guests, our lecturers, professionals, dear brothers and sisters, to our this platform. And we are going to discuss today an important topic, which is sustainable economy recovery, why Islamic finance matters. This is what will be discussed today by our Professor Dr. Muhammad Eskandar, inshallah. As you know, we are trying to promote Islamic models, Sharia compliant financial models and strategies, and we are trying to cover wide ranges of topics, areas in Islamic banking and finance, microfinance, insurance, capital market, equity market. And also we are trying to focus on some specific topics like contemporary topics, sukuk, corporate banking products and practices, and some other contemporary topics as well. And in fact, our most of the programs, lectures are in Arabic language, and we are trying to increase our activities in English language as well, as we are arranging lectures and programs on Thursdays. All Thursdays of the month, we are trying to conduct programs in English language. Doctor, my voice is clear? Oh yeah, thank you. Because some people...
Loud and clear.
Okay, thank you. I think there is someone said that there is no voice. I think the problem is our brother's problem, I guess. You can fix it, maybe. So thank you very much for joining us today as well. And we'd like to welcome our Associate Professor, Dr. Muhammad Eskandar Shah, who is currently serving as an Associate Professor at the College of Islamic Studies, Hamad bin Khalifa University, Qatar Foundation. He holds a PhD in finance from University of Nottingham, United Kingdom, and a master in international economics and finance from the University of Queensland, Australia. And his bachelor was in business administration finance from International Islamic University of Malaysia. Prior to joining Hamad bin Khalifa University, Dr. Iskandar was an associate professor and associate dean of his School of Graduate and Professional Studies at the International Center for Education in Islamic Finance, INSIF, in Malaysia, and a postgraduate university specializing in Islamic finance, established by Bank Negara Malaysia, National Bank of Malaysia. He was also an assistant professor at the Department of Finance, School of Economics and Management Sciences, Islamic University, Malaysia. His doctoral studies, during that time, he worked as a tutor at the University of Nottingham and lecturer at Nottingham Trent International College, United Kingdom. Prior to this position, he was also the Dean of School Graduate Studies, Deputy Director of BNP Paribas Center of Islamic Asset and Wealth Management, and also Treasurer of Malaysian Finance Association. Dr. Iskandar is also financial sector specialist consultant for World Bank and advisor for Brunei Institute of Leadership and Islamic Finance, Brunei. He is also a managing editor for World Scientific Annual Review of Islamic Finance and an associate editor for Turkish Journal of Islamic Economics, International Journal of Islamic and Middle Eastern Finance, and Asian Academy of Management Journal of Accounting and Finance. Dr. Iskandar published many articles and also part of books in this specialization, and he also conducted many lectures, talks internationally and globally, and as well as in locally. So this is our honor again to have Associate Professor Dr. Mohd Eskandar Shah to conduct today's lecture on sustainable economic recovery or Islamic finance matters. So without further ado, let me invite Prof. Dr. Eskandar Shah. Please welcome, Dr.
Okay, Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. First of all, thank you so much, Doctor, for inviting me again. I guess, the interval between one and another is just getting shorter. So the last one I had was in December. But Alhamdulillah, again, thank you for the opportunity. The first thing is that whatever I'm about to share is just my thoughts. Some of the things that I've been reading all these past several months, especially after I moved to Qatar. So it's not really a research paper yet. It's more of thoughts that being put together that eventually sooner or later will be translated into a research articles, inshallah, or at least a perspective articles. Okay. So pardon me if some of the points are being said are not well researched or not well structured, but eventually this idea will be pushed to make it even better, inshallah. So Doctor, if you can share my slides.
Okay, I was about to get the slides from the technical committee. Never mind. Okay. So is it visible? Yeah.
Okay. All right.
Okay. Thank you. Yes.
Okay. So how long do I have? About 35 to 40 minutes?
Yeah, no problem. About from 45 to 1 hour, it's okay.
Yeah. Okay. All right. So I probably will take around 30 to 45 minutes, and then we'll probably spend a bit more time for Q&A. I'm more than happy to interact with some of the participants. So I don't have that many slides anyway this time around. So it's more of discussion, conversations that happening and that's going on, and especially for my reading as well. So can you just go back to the previous slides? Okay. Okay, so let me just start with visuals. I think it's very important for us to understand. Every time we have a crisis, we always try to say that, what is exactly the solutions, why things are keep happening again and again. So you always have to understand the fact that, crises happen because human beings have a very short memory. So we solve one crisis and then sometimes we'll do the same mistakes again. And we say that this time is going to be different. So the magic word is that, this time is not the same, but eventually the outcome will be similar. So now the question is that what are the common mistakes that people have been doing in the past? And what exactly that, the same modus operandi that being happening and eventually leading to the crisis. So this is something that we need to understand, because this is where the main value propositions is happening. Sorry, Doctor, can you see me? Suddenly my video has, okay. Someone closed my video. Okay. So what is exactly some of our mistakes? So if you look at, for example, the conventional system, the system that we have today require continuous credit creations, right? Or what we call as the continuous liquidity creations. I don't see.
Just 1 minute. Let me share another slides. Just 1 minute. You can continue. I'm just fixing the
okay. All right. So yeah. So what we've been witnessing so far is that we are witnessing these same problems. It's just that happening into a different crisis. So, and it's not that I'm saying that we need to put a stop to it. What we are trying to say is that we have to do something different to it. Let me just give you a simple example. During pandemic itself, a total of $14 trillion has been pumped into the market. All right. And during subprime crisis, the amount is much more than that. So the point is that money is not an issue. Liquidity is not an issue. But where this money goes, eventually the outcome of the new money creations is exactly the same. It goes into asset prices, it goes into stock market, it creates, for example, excessive optimism. And then the excessive optimism become, mania. People actually end up making wrong decisions, and then banks are actually making wrong decisions, laxing the credit quality, so on and so forth. And then eventually it'll go back and create another crisis. And this has been happening in 2008, and the same thing is going to happen right now as well. So, and then you can see that, the beginning of the consequences of our policies during the pandemic. What are the consequences? You can see that the sustained inflation risk. In America, for example, the inflation is almost about 7%. Stock market in America went down from 29,000 to 18,000, but now went up all the way to 35,000. And in Europe also, you have an inflation risk, an increase in the commodity prices, increase in, for example, in alternative investment like Bitcoin, cryptocurrency, and so on and so forth. So what you're exactly seeing right now in the today global situation is that excessive money creations because of a lower interest rate, and so on and so forth. So the point that I'm trying to make here is that I'm not saying that the liquidity that being created in the market is a bad thing. What I'm trying to say is that majority of the liquidity that being created in the market is going into what we call as speculative investments. And that speculative investment is in the form of, property bubbles, stock market bubbles, and financing, for example, a very unproductive investment, so on and so forth. So, yeah. Doc, can you move to the next slide? Oh, the slides are still coming. Okay, so let me just continue. So, all right. Okay.
Yes, okay.
Okay, so instead of thinking about finance is actually a bad tool, but finance is actually a good tool, because we have the power to allow or to make sure that whatever that we are financing going into something very productive. So I'm not saying that people do not think about what are the productive items. They do. For example, for sustainability investment or sustainability technology or sustainability infrastructure require about $9.2 trillion investment in terms of achieving our climate target. So that is basically what we call as a productive investment, because it's gonna, make it the infrastructure. People are investing a lot on supply chain infrastructure. People are investing a lot on, easing the business. However, we have to make sure that a lot of this money that being created, that liquidity that being pumped in, also being invested in social agenda as well, especially on health and education. So what the pandemic has shown us is that the disparity between the have and the have-nots is not just in terms of income gap, but it's also in terms of access to health, access to education, access to fundamental infrastructure. So one of the things that, I would like to propose, or basically this is just a common knowledge that everybody should think about it, is that we have to ensure that majority of the money that we have, or the money that being created into the system, doesn't really just go to speculative investment, but also goes to what we call as a fundamental investment. Because if you don't do that, what will happen is that, we just going to see another crisis. And people will say, oh, Islamic finance supposed to be better after the subprime crisis, and we are still growing at, a very small amount, and then now pandemic, yet we are still growing at a very small amount. So Islamic finance, even though it's becoming more, popular, but it's not really taking off like sustainability agenda. Today, for example, after 40, 50 years of doing Islamic finance, the total value of assets in Islamic finance is only about 3 trillion US dollar. And you compare to sustainability or ESG is almost about 81 trillion US dollar. So the exponential differences or the growth in ESG as compared to Islamic finance is actually quite obvious, and everybody can see that. And we are also writing a paper and to explain why and this is happening? So we found out that there are several reasons. Number one, obviously the infrastructure for ESG investment is much more simpler and much more easier to understand. They have the taxonomy, they have the assessment metrics criteria, they have the technology, they have basically the credit evaluation, they have the mechanism to manage the climate risk, so on and so forth. I'm not saying that in Islamic finance we don't have it. We do have it as well, but there's so much of debate and there's so much of separation between what we can and what we cannot as compared to ESG. So the point that I'm trying to make here is that if people want to accept Islamic finance, if people want to really be attracted to Islamic finance, we may have to think about in terms of making it as a complex value proposition and try to simplify it so that it becomes much more acceptable. And so the point that I want to make before we move to the next slide is that it's not the money is an issue. All right, it's finding the right investment is actually an issue. And for investment to take place, you need governance, you need institution, you need technology, and actually you need the right people in terms of the right policy in terms of executing. Just look at the numbers. The total net wealth of individuals and also companies in the world is almost reaching 500 trillion US dollar. This is not the number that I'm putting in just to make you excited. This is the number from McKinsey report. So what you're observing here, you're observing is that influx of liquidity, influx of wealth, influx of opportunity as far as the financing is concerned. So what we have to do with all this money, and in fact, most of this money are in the Muslim world anyway, especially in the GCC market. And what shall we do? We should provide opportunity, we should provide ideas, and we should provide, a new concept so that we can tap into this financing. Okay, Doctor, can we move to the next one? And if you don't do that, we're going to see something like this keep happening. All right, why something like this is keep happening? Just think about it. The credit become cheaper, the credit become more accessible, the credit become more and more available, but these credits are only available for people who can access to the credit. The same people who have already large amount of capital using their capital as a collateral and have greater access to capital. And the greater access to capital is actually being used to finance new ideas, new technology, new investment, and so on and so forth. So social mobility and inclusivity is becoming harder and harder. And if you live in the Muslim world, when we have, for example, or any part of the world, when you don't have a proper governance, when you don't create a social mobility by creating better education and also better healthcare for your people, then this inequality is just going to become higher and higher. And because of the surplus in terms of unskilled workers and semi-skilled workers, so people are working in that particular sector are basically earning much less as compared to the people who are in the skill sector. So all this complexity is actually what are causing a fundamental problem to our economy. And this particular problem are much more prevailing in the context of the Muslim world. So my suggestion is that, the first one is, let's not talk about money is a problem. Okay, money is not a problem. All right, money right now, because it's not backed by any currency, it's actually a fiat currency. All right, it's actually become a tool in terms of creating a wealth. So we are not living in the post-World War I, where you cannot be exactly increasing credit because you don't have a goal in your reserve. Right, before this, when you have a gold standard, things were quite simpler. You have this much of gold, you can only create this much of credit. If you have less gold, then the credit will shrink in the economy, so the price becomes cheaper. So when the price becomes cheaper, you export more, then you will accumulate gold from your neighboring countries. So when you accumulate gold from your neighboring countries, then you can continue creating credit, and then demand will go up, the wage go up, so on and so forth. So in the past, the gold has become a mechanism of ensuring the balance between one country and the others. But today, because we are living in the free exchange rate regime, so our currency is actually backed by trust, backed by strong economy, backed by strong manufacturing, supply and demand, and so on and so forth. So if any imbalances will be corrected in terms of, our depreciation of exchange rate, so on and so forth. So the point that I'm trying to make here is that people are keep on saying that today money is a problem. It's not money is the problem. Today is actually trust is a problem. Let me ask you a simple question. Why people do trust US dollar? Why people do trust euro, for example? Why people do trust UN? It's just a piece of paper. It's just the numbers that saying that, this value was $20, this value was $50, so on and so forth. So the reason why they are trusting all these major currencies simply because they have the ability to back the currency with a strong output, strong production, and so on and so forth. So if we want to do the same thing in the Muslim world or any part of the world, I mean, our currency should also be backed by strong output, strong economy, and also continuous production of ideas and to the economy. Only that we can make different. But at the same time, we cannot be following their playbook by not allowing, for example, social mobility or even creating opportunity. So we need to harness the energy that we have in the Muslim world by empowering women, by empowering, society, by empowering community, by creating better education, by creating better healthcare, love for science and technology, and proper governance, and so on and so forth. So this is exactly the point that I'm trying to make. How a sustainable recovery can actually take place using Islamic finance as the notion, because Islamic finance is about real people, it's about real business, it's about giving back to the society instead of looking at conventional finance. Is more of, is benefiting from capital and creating more capital and doesn't have a proper distribution mechanism, so on and so forth. So that is basically my point before we can move to the next one. Okay. All right. So I'm almost make up my important points, but let me just give you the historical narrative. And why I want to give you the historical narrative, because I want you to understand a few things, right? And of course, these are some of the things that I've been reading for the past 3 months. I'm reading this book called Lord of Finance by Liaquat Ahmad, and I've also been reading a book called Value by Mark Carney, and then I've been also been reading a book by, what is the title of the book? Yeah, The Great Search. So, and few other books as well. So obviously this is a process of accumulating knowledge. So let me just give you the historical narrative. Why this time Islamic finance has to be more aggressive and has to be more different. So think about it. After the First World War, 4 countries came together and tried to basically fix the monetary system. The America, the Britain, the France, the French, and also, oh, there's a question. Okay, go ahead. What is the question? Sorry, please go ahead. Someone raise hand. You want to ask questions? Please go ahead. Doctor, someone ask questions. Someone is want to ask question. Can we allow them to ask questions now? Or...
Yes. Yeah, Mr. Nawaf Saad. Yes, please, Mr. Nawaf. Mr. Nawaf Saad, we switch on microphone for you. Please, you may ask any question or you may. Mr. Nawaf Saad. I think maybe at the end of the lecture we can.
Okay. Right. No problem. So let me just continue the historical narrative. And why I want to talk about this is that because every time we have a big event like this, it's a great opportunity to reset the whole thing. And we never take the opportunity or to become a major player in terms of resetting the agenda. So just think about it, right? And this is what I got from reading the book, The Lord of Finance from Liaquat. So after the First World War, these countries that got together and trying to basically, create a system that benefit the winners. Obviously, who were the winners? The French, the English, and also the America. And who were the losers? Obviously, the Germans. All right. So they were designing a system in such a way that will benefit them as a leader in the financial market, because they were sitting in huge amount of gold reserve, and they have the opportunity to give credit to a smaller nation, and they become the hub of the financial center. So they decide where the capital actually going to go. Okay, and during those days, majority of the system is basically fixed to gold. So they were a movement of gold, depends on which current country is doing economically better and which country are not doing economically, or doing not performing economically. So obviously you probably know that particular system, which is lead to Second World War. Why? Because the Germans was very unhappy with the arrangement, and they can't basically pay off their debt. They have run out of their goals, and they cannot basically create credit, and the unemployment gone up to 25%, and so on and so forth. So, and then they lead to the Second World War. And then after Second World War, what happened is that the winner again, which is America, they came together, they came up with a Bretton Woods system where they fix US dollar to the gold system. So the US dollar eventually, when you do that, become the world currency as well, because you can keep gold as a reserve, you can also keep US dollar as a reserve. So this is exactly the benefit of winning, and benefit of setting up the rules. And another rules that they actually have set up as well, majority of the commodity that being traded in the world priced in US dollar. Think about it, oil is priced in US dollar, gas is priced in US dollar, and so on and so forth. All right, and then we have an oil crisis. 1973, OPEC get together, so on and so forth, and then Vietnam War, and then they said they cannot honor the exchange rate system, and then they moved to a fixed exchange rate system, floating exchange rate system, that really benefit again the people who set up the systems as well, because you can still keep their currency as a reserve currency, right? And then we had the subprime crisis, which again, the mother of all crises, a huge amount of bailout. And the reason why they wanted to do that is that because they want to avoid another Great Depressions. So bailout after bailout, and pumping money into liquidity, and so on and so forth. So where all this money goes, eventually this money goes to asset prices and speculative investment, stock prices. So who are the ones who's benefiting in? Obviously people who have access to the system, rather than people who are being deprived of the capital, and so on and so forth. And then we have this pandemic. Then this pandemic exposed us that there's a huge disparity in the community, not only in least developed countries or developing countries, but more importantly is also show the disparity in the developed countries as well. So this doesn't happen overnight. This is an accumulation of years of policies that only benefiting a smaller group of people, or basically the people who control the capital, or people who are actually having a skilled job as compared to having a semi-skilled or unskilled jobs. So what I'm trying to say here is that now there's an opportunity to create a better world after pandemic. So now we know the gaps. So what are the gaps? The gaps in terms of education. What are the gaps? The gaps in terms of healthcare. What are the gaps? The gaps are in terms of opportunity. What are the gaps? All right, basically the gaps in terms of how do we move forward as a country. We have weak governance, for example. We have less investment in terms of sustainability in infrastructure. We have less investment in terms of supply chain initiative. We are less investment in terms of improving governance. So somebody asked me what exactly that we should do. We should be able to use the financing tools to reward all this positive behavior. So instead of just saying that you'll be rewarded by putting your money in the stock market, we should also giving an incentive structure to the market players to reward people who are actually doing the right thing. For example, if you are performing as a school, you should be given more grant in terms of hiring better teachers. For example, if you are running a better hospital, so you should be given more grant in terms of making your hospital even better. Because these are the people who are going to create more opportunity. Because the common sense tells us that if you have knowledge, and if you are healthy, and you are given the capital and also the opportunity and the skill, obviously you basically going to do something good. You think about it, right? A lot of people invest huge amount of money in terms of security. Some people say, is it a good thing or is it a bad thing? For me, if you create a country of security, you can actually work until 12 o'clock at midnight, for example, or you can have a life until 12 o'clock or 10 o'clock, or you don't even have to worry about, burglar and so on and so forth. So the moment you have a peace of mind, all right, you don't have to worry about your safety, you are actually, can have a good and comfortable life. Most people, what they do is that they translate this opportunity in terms of better ideas and so on and so forth. So the security that created by government in terms of giving education, healthcare, infrastructure, cleaner air, better housing, so on and so forth. All these are actually to put things together so that we create the best of individuals. And this is what Milton Friedman said, or even Adam Smith says as well. As long that we as individuals pursue our own interests for the benefit of collective society, then we're going to be absolutely fine. But with the moment we start pursuing our individual agenda at the absence of the benefit of collective society, then we basically going to see more harm than good. So I'm not saying that all the players out there in the world today are doing harm more than good. There are a lot of amazing stories all over the world, in Mozambique, in Malaysia, in America, in UK, all these startups and all these ESG, all these, social enterprise, amazing stories that are coming up. But what I'm just saying is that we are not doing enough, and we are not creating a proper narrative for Islamic finance to make it a mainstream. So I'm saying this is an opportunity. Why I'm saying this is an opportunity? Because a lot of people have suffered during this pandemic. So if you continue doing the same thing, we're not going to get a different result. So I'm saying, let's do a scanning and try to look at the gaps that we have and try to come up with a better policies, go back to fundamentals, which is education, healthcare, security, opportunity, better infrastructure, and food security. That is, a lot of people, never think about food security. People waste food, throw away food. And apparently one of my students here told me that, doc, in America, 1/5 of kids are living below poverty line, but 40% of the food that being produced just end up in garbage or been thrown away. So why there is so much of disparity between people who have and people who have not? So this is something that for you to ponder. Can we move on to the next one, please? Okay. All right. So there's supposed to be a picture. So what I'm trying to say here is that, and then this is also amazing, we cannot let our future decided by small group of people who may or may not have our best interests in their heart. So today, people are keep talking about shareholders maximization. All right, think about it. We just had a crisis, right? Pandemic, and it's really like one of the events that shook the world, right? But if you go to Wall Street, people are making $10 million bonus, $15 million bonus, so the big bonus culture is back. We just had a crisis. We just had thousands of people died, from COVID-19. In fact, the COVID-19 is still going on. But still, the culture of bonus, people are enjoying their life, big money, big paycheck, and so on and so forth. Is back, life resume as normal, and people are just moving on, and we people continue exactly doing the same thing, and hope another 10 years we may see the same thing happening again. And who exactly going to suffer? Most of the people who are actually not benefiting from all this upside. So I'm saying, with this fintech, with all these startup that we are coming out right now, is a mechanism of what we call as democratization of finance. So we don't have to allow the finance to be centered only among the investment banks, or only among the commercial banks, or even only among the big players. So this democratization of finance through fintech allow the smaller players to pursue their interests, to pursue their capital, to be channeled to more productive activity or more impactful activity or more sustainable activity, instead of just channeling all these resources to speculative investment. Of course, even whatever I say, many of you still going to put your money in Bitcoin because you're going to make money. You're still going to put your money in the stock market because you're going to make money, and this is a good investment. Go ahead and do it. I'm not saying that it's a right or wrong thing. You know, of course, there's a debate whether we should invest in crypto or not. I'm not going to go into that debate. But what I'm trying to say here is that there is a time that you need to channel your resources into doing fundamental things. And Islamic finance should be championing those fundamental things. So for me, that is what we call as a sustainable recovery. What we did after the Second World War, build infrastructure, build better school, build better universities, build better hospital, build better governance, for example, choose better leaders, choose the best among us to be our leaders, not the most corrupt one, not the one who give you, for example, a few $100 for you to vote to them and so on and so forth. That's not how a mechanism works. Because if you don't do things correctly, we're going to suffer. Is it true that we will suffer? Just think about it. America used to be very poor 200 years ago. Now they are in the early 1900s, and even the whole 1900s, they were the most superpower. But maybe now China is doing the right thing. They are also becoming superpower. So even you go back to the Quran and also you go back to the history, all the greater civilization has been replaced by better civilization. So I'm saying that if you don't do the right thing and someone else do the right thing, then don't complain if your life is miserable and someone's life is actually better. The reason why they're having a better life, maybe because their policy is better. Maybe they work harder. Maybe their work ethics is better. Maybe their governance structure is better. Maybe their science is better. Maybe their education is better. Maybe their healthcare is better. Maybe their roads are better. Maybe they keep doing better things. So that's why they are being rewarded with better life. And we just have to keep asking ourselves is that why we are not having a better life? Not because the technology is not available. Don't tell me about technology. Now we have quantum computing. All right, we have nanotechnology, we have 3D printing, we can send people to moon, we can actually create so many beautiful things, we can do genome sequencing, we have discovered more technology that we ever need to even to survive in this world. We have more gadgets that necessary, we have everything that we need. So if we're still not having a good life, if we're still not able to develop our countries with all this technology that been given to us, then we just have to ask ourselves is that, are we doing the right thing? Are we using Islamic finance to create a proper narrative? Or are we just keep talking about doing the right thing, but eventually never even take the initiative to do it in the first place? So maybe move on, next one. Okay. So this is something that we should not be doing. Right? We should not be taking advantage of the poor. We should not be basically making rent-seeking behavior. We just giving out contracts to the people that we know. We charge extra, for example. Something that expropriation of wealth, and we always say that capital can be only channeled to certain group of people and not creating opportunity. And this idea that wealth will trickle down, we have create rich people, and then we also will create a better economy, so on and so forth. Now we are not even talking about 1% of the population who's controlling the economy. We are just talking about 0.01% or 0.1% who are actually controlling many things. But I'm not saying that our life is not better. Of course my life is better than my parents' life. I have gadget, I have technology, I have mobile phone, I'm living in a better house, so on and so forth. But unfortunately, not everyone have given that opportunity, and everyone not be able to enjoy what we are capable of giving to the society. Having said that, I'm not saying that all the things that are happening right now is problematic. I'm not saying it. There are many bright spots. Indonesia is doing well right now. Maybe Turkey is having a bit of problem. Maybe Malaysia not so much right now. But there are bright spot here and there. But the point I'm trying to make here is that Islamic finance have to be collectively coming out with a more compelling narrative so that we champion this notion of sustainable recovery. Okay, and last slide, please. Okay, all right, last slide, please. Next one, please. Okay, so what I mean by sustainable recovery, let me just end my presentation here. For me, sustainable recovery means that we define capitalism, what we call as a stakeholders capitalism. I'm not saying that capitalism is the good thing, or if you still want to pursue with capitalism, I'm not saying that it's a bad thing, but if you still want to pursue with capitalism, you need to redefine the stakeholders, including employee, including common people, including environment, even animal, for example, should not be harmed. We should basically take accountability with everyone. It has to be sustainability, must be really supporting sustainability agenda. It also must be supporting social agenda, which is more important, especially education and healthcare. With this pandemic, probably you know that many people didn't even go to school. Many people didn't have access to, for example, home learning. So they lost probably 2 years of education. And how we want to make up for that loss. Because study have shown the first 10 years of life is the most important. So if you get good education in the first 10 years of your life, you can actually build out from there and actually access to more and more education from there on. So what happened to this child that 7 years old, 8 years old, or 5 years old, 6 years old, who didn't have the opportunity to study properly because of this pandemic? So what exactly that we're going to do about it? So social agenda has to become very important. We also have to emphasize on community development. So what this pandemic have shown is that our dependency among our community. So we need to create a safe zone. If anything happened, we can still continue our life within the radius, for example, between 5 to 10 kilometers. So we need to redefine the concept of urban development. In fact, let's not talk about country level net zero emission. Maybe we should talk about, a community level net zero emission. So whatever the country, whatever the community produce in terms of CO2, at least for that particular housing, we need to ensure that we have enough technology or enough trees or enough mechanism even to, offset all the CO2 that being produced by that community. So we can, what I'm trying to say is that don't look at the problem at much bigger scale. Everything has to be done by the government. But sometimes we can also empower the community and try to do the right thing so that at least among our community, we can build trust and build more cohesiveness. So if we can do a pocket of community here and there, then that it can become a role model for others. And then this is my own view, redefine concept of finance. Finance should not be equate to just pursuing anything with the highest NPV, anything that can give you the highest return. That just maximizing the concept of risk and return. But I think finance should be more towards making impact to the real people, to the real economy, and creating opportunities, so on and so forth. And last but not least, which I really believe in, that in Muslim world we are really lacking of strong leadership. So we need strong characters, we need strong leadership, we need strong ideas, and more importantly, we need honest and sincere people. So with that, thank you so much. I'm more than happy to take questions. So, yep. So just to leave with the quote, wealth is so concentrated that the large segment of society is virtually unaware of its existence. And this is not what Islamic finance should be. In fact, we should try to make opportunity or create opportunity for almost every single human beings that are living on this planet. Okay, so with that, Dr. Mohd, thank you so much. Assalamualaikum. And please let me know if there are any questions from the participants.
Okay, thank you very much, Doctor, for highlighting the problems and barriers to sustainable recovery and also historical facts that you highlighted. Then, Alhamdulillah, we also got some points of reasonable solutions to this sustainable recovery from our guest speaker today. We thank you very much, Doctor. And now we open the floor for questions and or any comments. I request our participants either to write the questions in the question section or raise the hand so that we can switch a microphone for you. Any questions or any comment, any additional point that you would like to add with our topic today? Yes, what is the relation between the concept governance and Islamic finance? Doctor, there is one question.
No, I think that's a very important question. Because the moment you talk about Islamic finance, the word governance seems to be part of it. We don't even have to emphasize the word governance anymore the moment you start practicing Islamic finance. All right. But unfortunately, because end of the day, this is something that people don't really appreciate, and I keep on telling people this: finance is not about money. Finance is actually about trust. Okay. And a lot of people keep trying to basically criticizing Islamic banking. All right, because Islamic bankings are not able to do proper Islamic finance contracts, so on and so forth. Yes, to a certain extent. But many people, they don't ask is that why we need banking? Because there's a lack of trust in the system. So we need a concept of intimidations. All right. Because when there's a high level of trust, maybe the function of intimidation can be minimized. Right. And the solution can actually be provided by fintechs, by capital market, by mutual fund, and so on and so forth. So for me, right now, with the system that we have, if you can create better trust, people can really believe in the product and services that you're offering, and you always have the best interest of your customers and the people in mind rather than your maximizing whatever we call it, then automatically Islamic finance will flourish. So governance, for me, my apology if I just answer it in slightly different way. So this is my thought process. Governance is just a mechanism of enhancing trust. Okay. So by right, if you really want Islamic finance to flourish, governance should not be an issue at all, because it should be taken for granted that once you do Islamic finance, we have a proper governance. We have a proper Sharia framework. We have a proper Sharia review. We are actually only dealing with only halal business and so on and so forth. But this is not an easy process. This is a long journey, and this requires huge amount of effort to build trust. But trust me, the moment you build high level of trust, then the function of intimidation can be minimized. The function of resharing can actually be maximized. There will be greater role for capital market. There will be greater role for fintech. There's a greater role for Islamic contracts, so on and so forth. So that's for me the view of governance and Islamic finance. If that answered the question, Doctor. Okay.
Thank you. Thank you very much, Doctor. We take now one comment from Dr. Ilyas. Dr. Ilyas, yeah, welcome, Doctor.
Assalamu alaikum, Dr. Mohd.
Alaikum assalam wa rahmatullahi wa sallam. Faddal.
Thank you very much for giving me the chance for this question and comment. And thank you, Professor Muhammad, for your excellent presentation. I want to ask about slide number 8. Slide number 8, you mentioned in the slide that to reduce the dependence of so many households and business and so few institutions that engage in so many risky activities. So here, how can the Islamic finance or the Islamic banks be included in the risky activities to maintain the sustainability and at the same time comply with the central bank regulation and the standard like Basel or something like that? I think that Islam is a comprehensive religion and can solve all the problems around the globe. But there is a problem, and I want your opinion. Where is the problem and how we can manage with it? Is it in the top management of the banks or Islamic finance? It is in the Sharia scholars or in the employees or in the society? And at the last slide 10, I think you said sustainable recovery. And you said the last point, it is the leadership. Leadership, I think from my opinion, okay, the problem it is from the leaders, from the management of the Islamic banks. Are you agree with this or not? Thank you very much for this. Thank you.
Thank you so much, Dr. Ilyas. Dr. Mohideen, if I can respond to that. So
Yes,
if
please.
you look back at the slide number 8, this quote by Mervyn King. So why exactly he's saying this? Because he's saying when subprime happened in 2008, the banks actually have lost directions. They're supposed to be playing the role of intermediation and channel the deposit from the customers and put into more productive activities like financing companies with new ideas and so on and so forth. But what has happened is that majority of the banks engage in more speculative investments, especially on property, bundling the asset together. A lot of assets, deposits are being used for trading activities rather than for financing activities. And in fact, they have reversed it because of this Basel and so on and so forth. So now the amount of trading by the banks are much more smaller as compared to 2008 financial crisis. So to answer your question, Dr. Ilyas, the banks supposed to be pursuing the interests of the society or basically interests of the nations. But when the bonus culture happened, and this is also being said by the chief economist of IMF previously, and also used to be the governor of Central Bank of India, Raghuram Rajan, now he's back to America School of Chicago. He says that one of the reasons why the banks are involved in too much of risky activities has got to do what we call as an executive compensation. So this go back to your question of leadership. So a lot of CEOs right now, their performance are being tied up to their financial performance. The ROE, the ROA, all those kind of things. And think about it. Their bonuses is not like a small amount. You're talking about, $10 million. In fact, last year, there was one hedge fund CEO in America. The total package was $3 billion per annum. So think about it, right? So when you have this kind of executive compensation package, and also may happen in Islamic banks too. So what is your incentive? Is your incentive to take, for example, the money and put it more in the sustainable investment, which may take 10 years before you see the reward? Or you want to maximize the reward immediately so that you will also be paid a huge amount of bonuses too? So what do? You as a person who run the banks, obviously you want to put in money in much more risky activities, increase leverage, so that by doing that, you will increase your ROE. I'm sure people who have studied finance, you probably know this, leverage will increase ROE and will increase ROA. So of course, I want to make huge amount of bonus, because if my friends is getting huge amount of bonus, why not me? Okay, of course, we in academia, there's not much differences between, one person publication and the other person publication in terms of bonus. But in the banks, it does make a difference. So to answer your question, a short answer to your question is that our KPI or our performance assessment may not necessarily only link to the financial performance, but we also have to really look at whether the banks are contributing to sustainable recovery or not. Are they contributing to the environment? Are they contributing to education opportunity? Are they empowering more small businesses and give them more financing so that they can actually do better businesses, so on and so forth? And by right, Islamic finance should be not allowing people to make this much of remuneration, because it's not fair that when economics is actually not even recovered, there is still pandemic going on, but the CEOs and the top executive are making millions in terms of bonuses. So this is my view, doctor. Okay.
Thank you, doctor, for this Wonderful reply. And we are still waiting for some more questions from the participants. Is there any more question or comment?
I can see my token of appreciation, virtual token of appreciation. So
yeah, yes, Prof. Inshallah, in future we'll try to send the appreciation and as well as certificate to you, inshallah.
Inshallah. So
Yeah,
I have collected 3 so far, inshallah.
Oh, mashallah, mashallah.
But anyway, again, doctor, thank you for opportunity. So this is just a sharing, some of things I'm still working on, trying to put my thoughts into a paper. So inshallah, I'll try to do my best, to pursue whatever I can. And I hope people who are listening also will try to pursue whatever right, and to create a better narrative for Islamic finance. Okay.
Okay. Doctor, I think there is only one more from.
Oh, okay. All right, there's one more. Okay, let's take one more, last one. Okay, please go ahead.
Brother Jasmine, I think he is IIU graduate. Brother Jasmine.
Hello, assalamu alaikum.
Walaikum salam.
All right, I'm glad you can hear me. I hope you're all doing great and safe there. So I'm Jasmine. I'm a triple alumni of IIUM, Malaysia.
Yes, welcome, Brother Jasmine.
So I know actually, of course, both of you, Dr. Eskandar Shah and even Mohd. I have a question actually to ask. How do you perceive the recruitment by Islamic financial institutions, banking, Islamic economic institutions of talents who graduate from programs of Islamic banking finance in different Islamic banking finance institutions? Do you see a problem in that aspect?
I don't. Sorry, can I answer? Okay.
Yes. Yes, please. Yes, please.
I'm hearing echoes. Someone has to.
Yeah, I think it's a problem from Brother Yasmin, I guess. I think now,
Okay.
yeah, you can respond. Yeah.
Okay. Definitely, I would probably say that the demand wasn't as much as when Islamic finance started, especially in the early 1900s and more importantly, 2000s. Demands are slowing down. Obviously, because the number of programs that offered in the university are also reducing over the years. But even the existing program, the number of students who actually wants to do Islamic finance are also decreasing as well. So this is where I think Islamic finance has to go beyond just the fundamental concept of banking and capital market. So we really have to not reshape the future of education, but I would probably say that trying to embrace some of the more important pillars that are happening right now. So the discussion should go into sustainability. The discussion should be looking at digitalization agenda, SME empowerment, all these relevant concepts that we are talking about to create even a better future. Even now, people are even talking about AI, machine learning, becoming more and more relevant even for Islamic finance as well, identifying behavior and so on. So to what extent, I wouldn't say the demand in banking and capital market is saturating, but obviously the know-how and the technology to do banking and capital market seems to be quite established. So now we have to push all these talents or some of these talents that we are producing into much more broader scope. So that would probably be my answer to your questions, not just.
Thank you, Doctor. Thank you, Brother Yasmin. I think we are concluding the session for today. We thank all the participants, online guests from around the globe for joining us today. And thank you so much. And see you again in next session, inshallah. On next Thursday, we'll come with another topic and with another guest speaker, inshallah. And we thank our guest speaker, Associate Professor Dr. Muhammad Eskandar Shah, for your time, effort, and for your continuous support to this association. And our thanks go to our management board, especially Dr. Alal Ubaid, who is the Director General of this association, for their wonderful service and contribution to Islamic finance globally. And we pray to Allah subhanahu wa ta'ala to grant our time and effort. And may Allah bless us all. So, Doctor, inshallah, we'll see you again in another session very soon, inshallah. May Allah bless you, Doctor. With that, we conclude today's session here. Subhanakallahumma bihamdik. Ashhadu an la ilaha illa ant. Astaghfiruka wa atubu ilayk. Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum assalam. Thank you so much. Assalamu alaikum.
Good. Assalamu alaikum.